Well, hello. Thank you for joining me. My name is Kay Mortimer. I'm an enrolled agent with over 26 years of experience in accounting and tax. And today I wanted to just talk with you today about some year-end tax planning tips, things that make it simple for you. Being an accountant and being in taxes for many, many years, I'm very familiar with your need for learning how can I be prepared for either my tax appointment with my CPA or tax professional, or to do things on my own, to do my tax return on my own. So I'm hoping to give you some help in that. So I want to do a series of videos here to help you with that, called Year-End Tax Planning Made Simple. And the first thing I want to discuss as an overview is just, obviously we're looking at things that are legally able to help us to minimize income and maximize deductions. So that's the goal of your tax planning, so that you get the biggest tax advantages and tax breaks that are legally available to you. And when we file the tax return, obviously on the front of your 1040 form or your 1040A, you're going to deal with such things as your income from the various types of sources of income you may have. And then you have a situation where you may have some exclusions that apply. Perhaps you've got student loan interest that you can deduct, or you've made an IRA contribution or such things as that. Then you deal with your deductions and your personal exemptions to arrive at what is termed taxable income. It is from that taxable income that your tax is calculated, either through the federal tax tables method or through capital gains worksheet method and so forth, the Schedule D and so forth. You may be liable for some additional taxes if you had self-employment tax that was due or some other things, and you want to take advantage of every possible tax credit that applies. There are non-refundable tax credits and refundable tax credits. And the non-refundables simply give you a tax credit against applicable tax to reduce it to zero, but they cannot be granted to you in terms of an additional amount in a refund. A refundable tax credit, however, is allowed to be sent to you in addition to any other refund you may be due. The other thing that a refundable tax credit could do is reduce any balance due. Both credits could possibly reduce your balance due. But let's say, for instance, you had no tax due, but you did have a little bit of a profit in your business, and so you were going to have some self-employment tax that was due. A non-refundable tax credit is not going to help you with that, but a refundable tax credit could. Okay? So that's part of the difference between those. And then you get to the bottom line figure of your net refund or your balance due that you have to mail to the Internal Revenue Service or have them take out by ACH or something. So what we want to do is try to find ways that can help you with tax planning, and that's what these are designed to do. We're going to look at such things as how to reduce your income or possibly shift some income from one year to the other, factors that you might want to consider in regard to your income. In some cases, there's not a lot you can do about your income. You've worked for an employer and you've got a certain pay that you've received. There's nothing you can do about that. But there are cases where you can minimize some income from some other sources and so forth. And we want to talk a little bit briefly about those. We want to talk a little bit about some of the exclusions to your adjusted gross income that might apply to you. Such things as student loan interest, IRA contributions, self-employed health insurance deduction, etc. We want to consider, we'll have several videos that will consider a little bit more in depth about itemized deductions that could qualify in your case. And so I'll briefly mention those right now. They're generally categorized in major categories in regard to, say, medical expenses that are deductible for you, taxes that apply that you can deduct, your mortgage and interest deductions, charitable contributions, and then there's a space for miscellaneous. Some of those are subject to 2% of your adjusted gross income, and certain other ones are not. And so we want to look at individual, your itemized deductions that you could qualify for. We also want to look at some tax credits that may apply to you, give you a little bit of basics about some of the different tax credits, as I mentioned, the non-refundable and the refundables, and then we'll talk also about some additional taxes you may have owed. We can also look at ways for you to pay your taxes. If you work for an employer, obviously you're under a withholding requirement, so there's some tax monies being withheld from your pay that might be able to help you with your tax liabilities. But if you're not, or if you have additional income, perhaps maybe you're bivocational or whatever, and you're working for yourself, moonlighting, etc., you may need to consider quarterly estimated tax and so forth. So we want to talk about some of those different things, and I hope that this has been somewhat informative for you, and as we get into a few of the other videos, I trust that they will be a blessing to you. So God bless you, and thank you for joining me. I do hope that you will subscribe to my channel, which is K Mortimer EA on YouTube. Thank you, and you can also visit my website, www.kmortimer.com. Thank you again.